continue on with our epic adventure. We've looked at assets, but we know that the balance sheet also has these liabilities. Liabilities is what the business owes to somebody. Now, this is actually categorised into a couple of headings. The first one is capital. Then we've got non-current liabilities, and then we've got current liabilities. So let me go through what these mean. Capital is money injected into the business by the owner. So this is money injected into the business by the owner. And what we are looking at specifically here, guys, is what we call a sole trader business. Or it's also referred to as an unincorporated business or a self-employed business. So this is like a one-man band. He owns his own business. It's not limited, it's not incorporated, there's no legal separate entity between himself and the business as such. So if the business goes into debt, the owner of that business is liable to pay that back. So what can happen, and this is what happened with HTFT, we were actually, when we first set up as a business, we were a partnership. So a partnership is very similar to a sole trader business in the sense of it's unincorporated, so any debts incurred by the business would have to be paid by the partners if the business can't pay it back. But instead of one person running the business, there are two or more people running the business. And that's how HTFT first started. We were actually a partnership. We've now incorporated into a limited company. So we got bigger and we changed our partnership status to become a limited company. So we are a legal separate entity in its own right. So HTFT is a legal separate entity in its own right. So you do have different types of businesses, and therefore the reporting is slightly different, and also terminology will be different. I mean, I'm not sure if you have heard of this term before, but for a limited company, which you'll see at level 4, you don't call it capital, you call it share capital. So there's just tweaks depending on what type of entity you are looking at. We're going to focus on sole traders, unincorporated businesses. And this is where you inject money into the business. Now, think of this logically, guys. We set HTFT up 5 years ago, let's say. It was about 4.5, nearly 5 years ago. And we put money into the business. But that business still owes us the money, doesn't it? The business owes the owner that money. So if the business owes the money, what do we call that? Is it an asset or a liability? Perfect. Couple more? Lovely. Excellent. Yes, it's a liability. Now, the owner isn't going to sit there and say, I want my money. It's not going to say to the actual business, give me my money, give me my money. It's your business at the end of the day. There's going to be no pressure in the business paying that money back. So it is a special type of liability. Now, hopefully one day you would have it back, wouldn't you? You've then got profit. Now, in regards to the profit, this is what the business has made over the period. So this is what the business has made over the period. And this is paid to the owner. That profit is the owner's profit. The owner is entitled to that because they own the business. So if the business makes money and you're the owner, you are entitled to have that money paid over to you. So that profit is owed to the owner. Is that okay? Does that make sense? It's going to go, give me my money. Well, they're not saying that, okay? But technically, it's the owner's right to have that, not the business's. We then have something called drawings. Now, drawings is unique to sole traders and partnerships. So you certainly wouldn't see this for limited companies. And this is money taken out of the business by the owner for personal use. Let's write that down. So money taken out of the business, whereas capital was injected. That was put in. Profit has been made, it's been created, whereas drawings, this is where the owner is taking money out of the business for personal use. So it is not business related. So it might be, like my mom, bless her, she takes 600 quid a month out. That's what she does. That's hers. That's private. That's not a business expense. As a sole trader, you don't have wages. So, you know, like us guys, we're employees. We get a wage, and that's an expense to the business. If you are a sole trader and you own your own business, you don't get a wage like we do. You get the profits. So my mum, she'll take 600 quid out each month, and that is referred to as drawings. That's for her personal use. She's not using it in the business. Oh, I've got to tell you this story. Now, Megan, we have to be very careful because Megan actually works for my old boss. So you can't be telling Donna that I'm telling these stories, Megan. I won't name the clients, that we don't be telling anybody. So I don't even know if they exist. It used to be like over 10 years ago when I worked for Donna. But I had a client, this is a true story, guys, who did, like they did pest control. So, you know, they went into companies and did like rats catching things, and, you know, you have those little boxes that you have in corners. I don't know if you've noticed, but they used to do like pest control for offices, and they used to do training and things like that. Anyway, I went out to do their accounts, and in the accounts there was teeth whitening costs, and it was like £3,000. £3,000. This is like a long time ago. We're talking 15 years ago, easy, if not longer. This is where you're supposed to say, guys, I don't look old enough. No one's commenting. You need to say you don't look old enough, Vicky, and then I'll feel better about myself. But anyway, it's all good. So, teeth whitening, and it was in purchases. Thank you very much, Clarissa and Jess. It's a pest control organisation. So I looked at the invoice, and thank you very much, Jasmine. Thank you very much, Megan. And it was basically the wife's teeth. So the wife had her teeth whitened by the business. Now, what would we call that? Yep, absolutely. It's drawings. There's no way that is a business expense. So I had to sit down with the client and say, you can't have that in the profit and loss. That's not an expense to the business. You have paid for something that's personal from the business bank accounts. So that is actually going to come out of what is owed to you. And we call that drawings. Does that make sense? So I absolutely love shoes. So I'd be buying stuff with shoes. That's how I see it. So does it come out of profit? No, that's a really, really good question. Drawings do not come out of profit. Drawings reduces what the owner is entitled to. So if we just take this as an example, okay, we've just made these numbers up on this pro forma as an illustration, okay. You've got here, can someone just get their calculator out as well, guys, because I haven't got a calculator. We've got, oh, I can do this actually. You've got 5,000 plus 4,800. That comes to, double check me, my mental arithmetic is awful, even though I've got a first for a degree. I can't do mental arithmetic. That is, thank you. I was going to ask, oh no, 9,800. Can I have a seconder, please? It is. Yeah, lovely. 9,800. So if we just talk about the capital and profit, I said earlier that this is owed to the owner. So we owe the owner 9,800. However, on further inspection, we have found that they have spent money for their own use. So it's not business, it's their own use. So I'm actually going to take that away from what the company owes them. So the company doesn't owe them 9,800 because actually they've already taken some money out. So 9,800 less 1,300, does that come to 8,500? Because I had someone just double check that, please. Brilliant. So the drawings come out of the capital effectively, but we do show it differently. Is that all right? Does that answer your question? Brilliant. Now, interestingly enough, this, let's remember, is the 31st of December 2004. As at the 1st of January 2005, the capital brought forward will be 8,500. So the opening capital next year is 8,500. Whereas this might have been money injected, so we had no capital at the beginning of the year, so it was the first time of trading. So that 8,500 is rolled forward to be the opening capital in the next period. Is everybody okay with that? That's a liability. We've said that 8,500, that's owed to the owner, but they don't have to be paid it. We're not saying you must be paid that. We're not saying that, okay? It's just that it is owed to them at some point. You've then got non-current liabilities. Non-current liabilities are agreements where you owe money, but this is more than 12 months in duration. So a bank loan, you tend to sign up for a bank loan, let's say, for 2 years or 5 years or 10 years. With myself, I've got a mortgage that is 25 years. We've had the house for 7. So how many years left have we got? What's 7 less 25? 18. Oh my God, we've got 18 more years to pay back our mortgage. Crazy, isn't it, really? So that is definitely a non-current liability. Clarissa, Jess, you mentioned about a hire purchase earlier. How long's your hire purchase for? Because some of them can be a year, but some are like 3 years, 5 years, so 3-year one. So your non-current liabilities will be the liability in excess of 1 year. You've then got current liabilities. So again, this is where you owe money, but you owe money within 12 months. So cash is where you're overdrawn. They tend to expect it. Well, with an overdraft, you could, like I've got a mate, one of my best mates, she's been overdrawn for like, I'd say 10 years. It's an ongoing joke. And I'm like, Chris, it is super expensive being overdrawn. You get charges every day and interest, etc. But, you know, that's as he is, okay? Now, he's been overdrawn for years and years and years. But technically, the legal stance on that overdraft is the bank can ask for that money immediately. So they could call Chris up today and say, we want that money in the bank now. So that's why it is referred to as a current liability, because legally they can get that money. Does that make sense? So some of you might be sitting here going, well, I know mates who've had overdrafts for years, so I don't get that, Vic. But actually it's more about the legal position when it comes to a bank overdraft. Lovely, Leah. Everyone else, is that okay? You've then got maybe some new terminology for you, but not for Clarissa, because this is where Clarissa works. You've got trade payables, that's my American accent, or what the UK, the British would say, which is creditors. This is when we owe our suppliers. So we obtain supplies from somebody, like you guys. So let's say, what can you have? Stationery. Okay, you have an account with Staples Stationery, and you can pay 30 days. So you've got 30 days to pay. That means you owe them because you haven't paid them immediately. The way I remember this as a student, because I really struggled with debtors and creditors, is I owe money to somebody. That's how I remembered it when I was training. And with trade payables, you are paying your suppliers. Receivables, you are receiving the money in at some point in the future. That's how I remembered it. So this is where you have purchased goods on credit. So you've got to pay, haven't you, at some point? And then by adding our capital, our non-current liabilities and our current liabilities, that will give me my total capital and liabilities. And as you can see from these numbers, what should happen is the bottom half of the balance sheet or statement of financial position agrees to the top half. I absolutely love accounts. Look at my little face. I'm so excited because when you do a balance sheet and it balances, you're like, Accountancy is amazing because you can balance things, you can reconcile things, if it's complete. It's pretty awesome. And that's what we're going to work towards. We're going to work towards making these statements. Now, before we move on, are there any questions in regards to the balance sheet or what we refer to as the statement of financial position?